I recently put out a video where I was discussing the potential of a turnaround happening at Meta, but at the end of that video, I did promise you guys that I would make another video talking about sort of like entry points into the stock. And so that's what we're going to cover in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Let's dive right into this one because this one's important because a lot of you guys do like when I discuss entry points into securities. Now, the first thing that I will say, and every time I discuss entry points, really what I'm talking about is what is the best way to buy into this opportunity. Now, none of this is ever a recommendation for you to buy or sell securities. That's not the point of this channel. The point of this channel is just to do good research and talk about how you could enter into opportunities or why you may not necessarily want to enter into opportunities. And that's really the focus of this channel. And so when it comes to determining how to enter into opportunities or just analyzing what to do, you really got to take into account, and I personally believe that value investors should be taking into account the options opportunities as well, because I believe that there are certain situations where cash secured puts or covered calls can be very lucrative and risk reducing for value investors. And that's why I cover them so heavily on this channel. And I know that there's quite a few of you who send me messages where you say that you really love when I do it. Now, let's dive right into this one. So you can see, as of the recording of this video, Meta shares are approximately $120 per share. Now, the reason why they might be lower when this video comes out is because there's generally a natural delay when the video comes out relative to when I actually record this video, because there's always sort of like a backlog of a few videos coming out. But as of the recording of this video, the shares are approximately $120 per share. By the time this video comes out, they could be a little bit higher or a little bit lower. And I just want you guys to recall the thesis behind the valuation for Meta. So I do believe that they're going to be running into risks in 2022. The ad spend market is declining right now. They have been offsetting it by higher sort of exposures, but that could turn around in the fourth quarter. So be very careful how you're forecasting out revenue growth for 2022. I'm forecasting out revenue decline. In 2023, I'm being what I would consider a little bit optimistic. I'm forecasting a 5% increase in revenue, but you could absolutely be completely correct if you're going to forecast out a decline in 2023. And then in 2024 and beyond, I'm actually forecasting out, and I might be a little bit optimistic here. You guys let me know. But I'm forecasting out an increase in revenue by 12.5%. And the reason why I'm forecasting out an increase in the revenue of 12.5% is because I do believe that Meta is making some really good investments into their platform where they generate all of their income. And what they're really focusing on is getting more exposures, winning on Reels by getting more exposures by focusing on AI, the recommendation engine, and focusing on new revenue streams as it relates to companies talking directly with consumers, and all of that integrating into sort of like a Salesforce platform, like a customer relationship management platform. And so I just think that this makes advertising campaigns more lucrative on Facebook and Instagram because you're able to communicate with the customers directly and essentially hope that they can either sign up for an appointment or make that transaction right then and there. And so, the personal touch is very important, and that's where a lot of advertising sort of misses out. But Facebook and Instagram is able to offer that. And so if they do more of that, I think that just advertising on the platform becomes more valuable. But we'll see how this plays out. I want to know if you guys think that revenue is going to grow at that rate. And if you don't, that's what I'm really encouraging in the comments. Let me know why I'm wrong. Now, revenue is not the only focus. The other thing that I'm paying attention to is the fact that part of that revenue increase is going to get offset by a cost increase. And so recall, guys, that profitability is likely, well, at least my profitability is likely lower than most people that are forecasting out Meta, because I believe that, because Meta has told us that they expect the cost of sales to increase with the VR and AR consumer hardware sales that they have in late 2023 and 2024, I forecasted out the cost of revenue to increase by 200 basis points or 2%. And so what you're really seeing here, and I pushed up the G&A as well. And so what you're really seeing here is that G&A, or just total cost as a percentage of revenue, is tracking at 75% in 2022. And I'm forecasting it to be approximately 80% by 2024. And so what you really have here is a situation where my revenue growth expectations might be a little bit optimistic, and my expenses or costs as a percentage of revenue might be a little bit pessimistic. And so you kind of have a balancing of those two. But let me know what you guys think in terms of the overall profitability of this company going forward. I just don't really know how to think about it. And so I'm forecasting more expenses as a percentage of revenue. Now, when it comes to valuing the company, I'm using sort of like a free cash flow per share net of stock-based compensation valuation. And so, stock-based compensation is that silent killer to the cash that owners earn. And so you do have to take that into account. And so stock-based compensation as a percentage of revenue is forecasted to be at around 11% of revenues. And so if it does run lower, the company is going to be worth, of course, more than it currently is valued at. And so I would love to see the options yield calculator to see if I can, or I'd love to use the options yield calculator to see if I can purchase this at a current share price or a share price of under $100 per share. And so you can see that I'm valuing the company at approximately $175 per share. My valuation might be low. This company might be worth around $200 per share. And I know a lot of you guys are valuing Meta at approximately $200 per share. I'm using a multiple of 17.5 times earnings. I think that's reasonable for this company. That gives me to approximately $160 per share. And then the excess capital, which is just that excess cash, brings us up to $175. So it's trading at approximately 70% of its intrinsic value. I think anything under $100 per share, even on a net basis, is probably reasonable with respect to entering this opportunity. But once again, that's not a recommendation to buy the stock at all. Now, let's look at the cash secured put types opportunity. So I just said I wanted to look at what the $100 cash secured puts could yield us. Well, notice the premium is $13.20. Now, at the time of recording this, the market is closed, and so this premium could change, and so you just have to keep an eye on what the premium is. If the stock goes higher, this premium might be a little bit lower. If the stock goes lower, this premium could be a little bit higher. And so you can see, based on that $13.20 premium for the January 19, 2024 cash secured put at a strike price of $100, the annualized yield of the cash secured put is 12.25%. So that's not bad. But the interesting thing is, notice what your net purchase price is. So that's $100 less than $13.20. That gives you a net purchase price of $86.80. And so that is approximately 50% of the valuation of $175. Now, if your valuation is $200, of course, that's way lower than 50%. And so, my conclusion is, although the 12.25% annualized yield isn't bad, it's not exactly high enough for me to tie my capital up for a year into this opportunity, but it's a great net purchase price of approximately $87 per share, which reflects, of course, less than 50% of the valuation. So this is not a bad place to start. And if somebody wanted to sell this, I wouldn't say that it's the worst thing you can do. Now, why, you might ask, is the current yield higher than the annualized yield? Well, it's because the number of days until the strike is greater than 365 days. And so you have to spread that 1320 over more than 365 days. That's how you're getting to the lower annualized yield amount. Now, if you just jump up to the $120 cash secured put strike price, the premium increases to $22 per share. So what does that reflect? Well, of course, you guys know what happens with cash secured puts. As you go up in the strike price, you're going to get a higher annualized yield, which is exactly what you see here, but you have less downside protection. So you can see your net purchase price is $98 as opposed to 80 something, $85 or $86 per share in the previous example. So what does this $100 mean? Well, I think the $100 is still pretty good as it relates to Meta. I already told you guys at the beginning of this video that, purchasing Meta at under $100 per share is pretty good, in my opinion. Not a recommendation, just how I'm thinking about it. And so, you go up $20 per share on the strike price to $120, and it gives you a much better, in my opinion, risk-reward profile, as it places you in that Goldilocks zone of selling cash secured puts, where I really don't care if the stock goes up or it goes down. If it goes down and I'm exercised, I own the stock at 56% of its intrinsic value, which is a pretty decent place to be, because I'm effectively owning it at a net purchase price of under $100 per share, which is what I like. And if the stock runs, I still made a cool 17% annualized. And of course, if it doubles, I missed that run. That is the opportunity cost of entering into cash secured puts. So if you absolutely believe in the security, it's always better to just buy the stock. And so what I always tell everyone on this channel, on the Patreon, everything, is that the best course of action is to always just own the securities. Don't play in the options game. I like to play in the options games for certain securities and certain opportunities, and this is one of them for me. But I don't necessarily recommend it to anyone. I just like to give you sort of more in terms of ways to enter into stock or securities opportunities in terms of deploying capital. Now, the other area that I do want to look at is the covered call opportunities for the same strike date of January 19, 2024. And so you can see that the $120 covered calls are yielding $27.36 per share. And so what does that mean for Meta? Well, you can see that on the second tab of the cash secured put calculator, there's actually a covered call calculator that you guys also get for free. So you can access these calculators in the description below. So just go at them. I provide these for free because doing YouTube for me is more than just about making money. It's about building a legacy. I want you guys to come here and learn. And so I just want you to sort of see how I think about utilizing cash secured puts and covered calls, more than just on how much premium can I generate. What I'm really trying to get across with these calculators is, what do those premiums mean? And so we go back into this covered call calculator. You can see that the at the money covered calls, which is the $120 stock price, and the reason why I'm calling it the at the money covered calls because the current share price is approximately $120 per share, so it's at the money. And what they seem pretty enticing because they're giving you a 21% annualized yield. Note, however, if you believe Meta shares will run in 2023, you wouldn't want to utilize this strategy because, you know, if the shares double from 119 to 240, you want to collect that whole 100% gain. You're not going to collect that if you sell the covered call at the money. But this strategy does give you a nice 21% annualized yield and a sub $100 per share cost basis at $92.40 if the shares don't run. So I think this opportunity is sort of the best of both worlds because you're getting that greater than 20% annualized yield. And if you're not exercised on it and you have to hold on to the shares, which is perfectly fine, your cost basis, if you want to look at it from that perspective, your cost basis is actually lower than $100 per share. Now, some people, of course, when they buy securities and sell covered calls, they don't like to look at their cost basis declining over time. They just look at that as the return, but their cost basis remains at $120 per share. But as I would say, that a cost basis of $120 per share for Meta is still not bad, just not comfortable with where I'm valuing the company. And so I do look at it from the perspective of a reduction in the cost basis. But if you do look at it from the perspective of a reduction in the cost basis, you have to acknowledge that you lost a year of return. So just think about how you want to frame it in your mind and decide how you want to do sort of like what we would call the mental accounting. And so I'll leave it there. I want you guys to let me know what you think about these types of entry opportunities, or what you think of my valuation of Meta as a whole. Now, the other thing is, a big opportunity that I've invested in recently is the Activision transaction. Now, I recently released a video where I take the position that I do believe Microsoft is going to crush the FTC as they go into trials for this deal to happen. And you can actually access that video if you haven't seen it right here.